So, if you're a founder in India, you probably think the only path to major growth is through venture capital, right? But what if I told you there's another really powerful route? A way to tap into the public markets, pour fuel on your expansion plans, and build some serious long-term value? Well, today, that's what we're diving into, the SME IPO. Let's break down what it really takes to go public.
You hear that phrase all the time, unlock explosive growth. But what does that actually mean? For a lot of small and medium-sized companies, it means taking a huge strategic leap. We're not just talking about funding your next project. We're talking about a move that completely defines the next chapter of your entire company.
So, first things first, what in the world is an SME IPO? The simplest way to think about it is as a special launchpad to the public stock market, one that's built just for small and medium-sized businesses. It lets you raise money by selling shares on platforms like NSE Emerge or BSE SME. It's kind of like getting into the big leagues, but with a rulebook that's actually designed for a company your size. Okay, so why would you go through all this trouble? Is it worth it? Well, the answer lies in a whole bunch of benefits that do way more than just put cash in the bank. They can literally reshape the entire future of your company. This right here gives you the full picture, and you can see it's about so much more than just money. I mean, yeah, access to capital is huge, but look at everything else. You're creating a real exit opportunity for your early investors. You're suddenly way more credible in the market, and you can now attract the best talent with stock options. And the best part? The rules to get in are so much easier than for the main stock market, which makes this a goal you can actually hit.
Let's just zoom in on the main event for a second, the capital. An IPO basically turns on the faucet to a massive new source of funding. And this isn't some one-time loan, nope. This creates a permanent platform to finance all those huge ambitions you have, whether that's expanding, building new products, or even buying other companies. And hey, you can't sleep on the power of perception. Going public puts a giant spotlight on your company. It's an instant credibility boost that makes you look a whole lot better to customers, suppliers, and top-tier employees. All of a sudden, you're not just another private company anymore. You're a recognized name, playing on a public stage.
And then there's all the value you've spent years building. For founders and those first brave investors, an IPO is often the very first time that all that hard work becomes, well, real and tangible. The market puts a clear, no-nonsense price tag on your efforts, and believe me, that can be a total game changer. This quote just nails it. Your company's fair value is now automatically assessed by the market. You go from these behind-the-scenes, kind of subjective valuations to a crystal-clear public number that shows what your company is worth every single day. Okay, so the perks are pretty amazing, no doubt. But the big question is, can your company actually do it? This is where the ambition meets the hard reality. So let's get into the nitty-gritty with the eligibility checklist. What's interesting is how specific these hurdles are. For example, if you want to list on the BSE SME platform, your company needs to have what's called net tangible assets of at least 3 crore rupees. All that means is the value of your physical stuff minus your debts has to hit that number. It's a very clear line in the sand. Now, this table is super helpful because it puts things side by side. You'll notice a lot of the requirements are pretty similar, like that max paid-up capital of 25 crores and needing a 3-year track record. There are some subtle differences, though. BSE wants a minimum net worth of 1 crore, while NSE just says it has to be positive. But the big takeaway is the same. You've got to be a stable, profitable business. And it's not all about the big financial numbers. There are some key operational things, too. Stuff you might not think about, like having a working website and making sure all your shares are in digital or DMAT form. Those are absolute must-haves. But most importantly, you need a clean legal record. No big bankruptcy cases, no petitions to shut you down. The regulators need to see that you're running a tight, healthy ship. All right, so let's say you've checked all the boxes. You're eligible, you're ready, so what happens now? Let's walk through the actual path to getting listed. It's a very structured journey, and trust me, you're gonna want to know the roadmap.
Okay, here is the game plan. It all starts with appointing a merchant banker. Think of them as your expert guide for this whole adventure. They're the ones who'll dig into your company's details and prepare the most important document of all, the Draft Red Herring Prospectus, or DRHP. That's basically your company's life story for investors. Once that's filed, the stock exchange folks check everything. They might even come visit your office and interview you. And that final step, getting the in-principle approval, that's the green light. That's when you can finally launch your IPO.
And seriously, I cannot say this enough. You do not want to go on this journey alone. Navigating this whole process requires expert help. A great advisory firm, what you might call a transaction catalyst, is absolutely essential to handle all the complex paperwork, compliance, and just making sure the deal is set up right.
Oh, and by the way, the journey doesn't just stop on listing day. You have some pretty big commitments after you go public. For one, your IPO has to be 100% underwritten, which basically means your banker guarantees all the shares will get sold. You also need a market maker. That's a broker who makes sure people can always buy and sell your stock, which keeps things flowing. And finally, you have to launch with at least 50 different shareholders. Now, for the real high flyers, listing on the SME platform, well, that's just the beginning. The next major milestone, the next level up, is graduating to the main stock exchange board. Let's see what that looks like.
And this comparison right here really shows you what a huge step up it is. To move up to a main board like the NSE, the requirements get way, way stricter. You've got to be on the SME platform for at least 3 years, have a shareholder base of over 1,000 people, and your net worth has to clear a whopping 75 crores. This is the big leagues for real.
So the big takeaway here is that migrating is the ultimate goal. It's a huge signal that your company has reached a whole new level of scale and maturity. And it doesn't just happen. You have to hit those tough financial goals and get formal approval from all your shareholders to make the jump. So there you have it. Going public is a massive, powerful destination. We've looked at the benefits, we've gone through the rules, and we've walked the entire path. But the real question, the one you need to ask yourself, is after seeing all of this, is your company truly prepared for the journey?